Hi, welcome to the Stock Scores Market Minutes for April 17th, 2017. This week I want to talk the 80-20 rule, then my regular weekly market analysis, and finally trade of the week on BPMX. Trading is not like most jobs. You don't get paid for your time. Often we sit around waiting for good trades to come along or waiting for conditions to be positive for profitability. It's often boring and requires patience and focus. Now, some of the time it is very exciting and profitable, and it is in those times that you have to work hard. You ultimately make 80% of your profits 20% of the time, and it's important to not give back those profits by working harder when the market is slow. If the market isn't in a giving mood like it was last week, you need to sit on your hands and do less. And when the market is positive for trading, whatever strategy you do, that is when you need to work hard, because ultimately most of your time is going to be not profitable or waiting. And then some of the time, the good times, are when you make all your money. All right, let's get into this week's market analysis. So why was the market so slow this past week? Well, we were basically stuck in a trading range. We had many days when the market would open and close near the same price. And so that ends up without a lot of follow through and volatility. You know, here we had a trend. You can make money in a trend, of course, shorting in a downtrend. Here we had a multi-day uptrend, and that is also easier to make money. But when the market is going sideways with lots of chop, it's difficult. Now, toward the end of the week, we did start to gather some momentum to the downside. And so short selling was working better at the end of the week because, of course, the market was helping the short sellers. Now, this particular chart, which is a 30-day, 60-minute chart, is basically in a downtrend, but not one with a lot of enthusiasm. So I would rate this chart somewhat negative. The longer-term chart for the S&P 500 is still in a long-term upward trend. Now, we were at the top of the channel. We talked about that last week, I think. And we bounced off of the top of the channel. We're now working our way back down to the bottom of the channel where the market should bounce. There is still more downside to go from here. And so my expectation is we more likely will be lower in the next few weeks than higher. Moving along to the Russell 2000, again, in an upward trend long term. Got up near the top of the channel there, working our way back. We don't have as much downside to get to the bottom of the channel, maybe another week or two, depending on the intensity of the downside move. So less risk in the small caps because they simply didn't go up as much as the large caps, and so they have less distance to fall to the downside. Onto the TSX, we basically in a sideways trading range over the last month. We had a little rally here. Now we're getting a little bit of a pullback there, but it's kind of a sideways, boring chart. On the longer term chart, we still remain in that long-term upward trend. We bounced off of the trend line, but my concern now is, are we building a falling top? Because if we break this upward trend line from a falling top, that is somewhat negative, quite negative in fact, and that would probably lead us to test this level of support down here. So we haven't broken the trend line. I don't want anyone to be in panic mode, but that is something to watch for. If we break that upward trend line in the next week or two, we could see further downside. So I recommend some caution there. On the small cap TSX venture market, many would call it a micro cap market, we're actually building optimism. You can see the bottoms are rising, and this is largely a commodity market. And of course, oil has recovered, gold has recovered, and that is why we are painting a positive picture here with an ascending triangle building on the TSX venture. What we need still is a breakout through, in which case the market should move up towards that resistance level. So it is looking positive here as commodity prices are improving. However, until we break out through that range, through that ceiling price, I wouldn't get too excited because we need to break through that resistance still. On the bond market, this is the U.S. Treasury bond market, we had a downward trend line, and we've kind of broken that through some short-term resistance. That indicates that bond price is likely to move up in the weeks ahead. That means interest rates moving down, kind of counterintuitive because, of course, the U.S. Fed has said that it wants to be in a cycle of raising rates. But the market here is telling us that the buyers think that the bond market goes higher. So that's an interesting thing. It's still not a great chart. It's broken a downward trend line, but it does have lots of resistance to work its way through. So it's not going to be a rocket ship to the upside most likely, but it is starting to build a little bit of upward momentum after being really dead for some time. The US dollar has been cycling lower, and that is one of the reasons we've seen some strength in things like gold and oil, because of course they are priced in US dollars. So if the US dollar goes down, it makes it easier to buy for people not buying in US dollars. We are in a little pullback mode. The primary trend into that is up, and we're in a flag pattern. If we break to the upside out of this, then it looks to me like the US dollar goes higher, or we stay in this range and drift lower. You got to watch for whether it can break this little pullback line that's been underway for 3 or 4 months, 1, 2, 3, 4 months. If it can break that downward cycle, then we move higher in the US dollar, but for now it remains somewhat negative because it is drifting lower. On the gold chart, this is an important chart. This is the weekly chart here, and I've been a bear on gold for some time, but I've also been saying that if we can break this downward trend line, then gold looks a lot better. And look what it did this week. It hit the trend line once or closed twice right here. And then this week, a big week to the upside for gold from a rising bottom. That points to gold moving up into here. And so I am now going to switch to having a positive outlook on gold from here. It was heavily oversold. It rallied up, got stuck at resistance just like we would expect, tried again, got stuck for a few weeks, and then this week finally breaking through. And so now it should move up into this level of resistance right there. On the oil side, really just stuck in a sideways trading range. It's been that way for a long time. Of course, if we look inside this chart, look at a daily time frame, we would see that we've actually had a pretty good bounce back in oil over the last 3 or 4 weeks. But in the big picture of things, this is still a sideways market, relatively stable. We need to either break to the upside through that resistance or break to the downside to be bearish. Right now, I'm really just going to be neutral long-term on oil. This is the interesting chart. Of course, we have the S&P pulling back to its trend line, flirting with a break of that upward trend line. And we're also seeing fear take a little bit of a jump higher and actually break this cycle of falling tops. You can see that we've now broken this top. And so there is a little pickup in fear here, and I think that's worth noting. It could be the market starting to buy insurance against a break of that upward trend. This is just a cautionary point at this point, but I do think it's worth noting, and I think the market deserves more caution. So my long-term rating on US stocks remain at bullish because the uptrend is still intact, but bearish short-term because we are pulling back and threatening the break of that upward trend. On the Canadian market, neutral on both time frames. We've been sideways short-term. We're starting to flirt with breaking the upward trend on the longer-term chart. Gold, neutral long-term. We still have some resistance to deal with, but certainly bullish short-term. That breakout that we had last week through that downward trend line is a big positive. Oil, neutral long-term. We've been in that sideways range for a long time, but bullish short-term. There's good momentum, although I do think it's going to run out of steam as it hits the top of that sideways price pattern. Seller enthusiasm is starting to increase in stocks. The Canadian market has formed a falling top, forgot the P, and the US market is approaching its upward trend line. Gold is at its long-term downward trend line and showing good short-term momentum as it broke through that last week. Oil continues to rally, but it is nearing resistance, and it's important to note that fear is slowly increasing, not panic yet, but starting to get there. This week's trade of the week is actually a position trade that I want to highlight. This is a stock that I picked up right here, wrote about it in the Trade Scores daily newsletter. Back then it was an official trade alert on this particular stock, and it didn't do anything for about a month. But what happened was it held above its support level, and that's what we always want to see is, does it hold the support level? And it compressed in volatility and then recently broke out there and has been moving higher. And I think this stock continues to go higher. I'm not sure I'd like to buy it up here. Really, the entry price was there, or maybe here at 60 cents, 55 or 60 cents. It's going to get a little bit of resistance at 80 and then maybe up in here, although that probably shouldn't be major. So I think the next stop will be in that 70 to 80 cent range as it deals with this old resistance back here, but it's a positive looking chart. And it all started with the critical thing for me, which is abnormal price action right there and abnormal volume. And I call that an action candle. It's one of the indicators that you can use on the Stock Scores market scan if you're position trading, or using my indicators for TradeStation if you are day or swing trading. That's one of the key things that we provide to my students. All right, well, that's been the Stock Scores market analysis and commentary for the week. Hope that you've enjoyed it. If so, please click on the like button, subscribe to the channel. Have a great week in the market, and trade well.